Welcome to the Transfer Pricing Method, the podcast where we break down the complexities of transfer pricing with top industry leaders. My name is Adriaan van der Heijden, and transfer pricing isn't just a profession to me, it's my passion. Today I'm joined by two well-known guests within the transfer pricing world. Our first expert of today is Rudolf Sinx. He has over 25 years of experience in transfer pricing and is one of the founders of Quantera Global. Also happy to introduce Mihai Lupu, partner of TPS Romania and a long-lasting and important partner within our transfer pricing network. Yeah, I think Mihai, there's some quite important news that has been published in Romania. Can you perhaps give us some background on why this is so important and what does it mean?
Thank you, Adriaan. Hello, everybody. Yes, we are living exciting times here in Romania from a tax perspective, and especially tax law relating to multinational group of companies, because the government just voted a new so-called tax on affiliates, and this is kind of a weird name, to just name it a tax on affiliates, but it actually refers to the limiting of deductibility for some specific categories of expenses generated by cross-border intra-group transaction. And more specifically, we are talking about the non-deductibility of expenses generated by the provision of management and consultancy services, and also the licensing of intellectual property rights if the transactions are undertaken with non-resident related parties. So basically, the deduction limit is set to 1% from the total expenses recorded in the financial records of a taxpayers. And irrespective of the amounts charged by the related parties, you will be able, as a local taxpayer here in Romania, for profit tax purposes only to deduct 1% from your total expenses. And the rest of the expense will be considered as non-deductible. This is a new law, but was debated for quite some time, and there were several iterations of the law, including changes in the value of the deductibility threshold, which was set initially to 3% and not 1%. The base on which this threshold was applied, which was initially represented by the total expenses of the same nature. So basically, you could deduct only 3% from the royalty expenses, but this was changed. Also, some adjustments were made regarding the category of taxpayers to which this measure will be applied, or the categories of expenses targeted. Initially, interest expenses were also part of the discussion. And also the scope of the measure changed during the debate which took part between the tax authorities and the local business community, because initially the measure was to be applied to all categories of transactions, irrespective if they were taking part between resident or non-resident related parties. But, we had the discussion that if we keep the deductibility limit between local related parties, this will lead to a double taxation issue, because you have to tax the revenue, but you do not allow the possibility to deduct the expense. So basically, there were a lot of changes which generated a high degree of confusion for companies part of groups. There is still some things to be changed in the law, but the estimation is that the law will be published in the local tax gazette in the next couple of weeks, once some minor changes are made. And this is, let's say, some, I would like to call it good news, but it's not good news. It's exciting news, but not good news for multinational companies.
Now, we had some discussions on this, and indeed, you actually mentioned good news, but I don't think, Rudolf, you agree, right? Is this
No.
good news from a European perspective or
No,
HQ?
that doesn't sound like so, isn't it? Unless I take it, Mihai, if the multinational, let's imagine, established somewhere in Western Europe, in Germany, Netherlands, or somewhere else, would have a subsidiary in Romania, indeed, finds this news on the doorstep in a couple of weeks, but awkwardly enough, would not have a management fee structure or license fee structure yet. Would that be allowed then to simply deduct 1% from its P&L going forward, or should all measures, OECD type of measures, still be taken, like proper design agreements, benchmark studies, and so on? And then the effect is, well, the limitation of the 1%.
Yeah, this is actually, let's say, you can consider it kind of a safe harbor. The 1%, it's like a deductibility limit, but you still have to comply with other, let's say, deductibility rules in the Romanian legislation, because there are also some additional conditions, like you mentioned, the possibility for the local taxpayer to show that the services were actually needed, that they were actually provided, and you have some justifying documents and so on. Because if you do not provide those type of information, then you will not be allowed to deduct even the 1%. And also, the deductibility discussion is kind of a different topic as part of the tax audit, and the transfer pricing discussion is another topic. So basically, even if you, let's say, are able to deduct that 1%, you still have to show that this 1% was established based on arm's length rules. So the TP discussion, it's still there.
Yeah, perhaps good to mention to the listeners, so we're recording this on the 29th of October, 2025. As you mentioned, it's still not published yet. I think initially it was meant to be published in September, something like that. You think it will be published in a few weeks, right? And perhaps you can also share the rationale behind this.
Yeah, so basically there are some, to answer your first question, there are some additional, administrative steps to be taken, because the law was contested in the face of the National Constitutional Court. And it includes not only this measure, but also other tax measures. And some of those measures were, let's say, deemed to be modified in order for the law to be good to pass. So basically, now the government has this task, to adjust the law, and after that, it's okay for them to publish. So basically, we are still waiting on some administrative things to be taken care of by the local government, and this usually takes time. So it's not a quick fix, because it has to go through all other proper canals. And regarding your second question, the rationale behind this measure, we had in Romania for some couple of years a temporary measure, so the so-called minimum tax on turnover, which is actually computed not starting from the turnover of the total company, but also from the total revenues of a taxpayer, to which some deductions are applied. And this new tax on affiliate was initially aimed to replace this minimum tax on turnover. So basically, the government wanted to say, oh, hey, okay, we marketed this minimum turnover on tax as tax on turnover, as temporary measure. Here it is. We are not using it no more, but we are introducing this new deductibility limit. So initially the intention was that the minimum tax on turnover to be cancelled, and the new non-deductibility rules to be made applicable for taxpayers with a turnover over 50 million euro, because the minimum tax on turnover was payable by this category of taxpayers with a turnover of over 50 million euro. However, what happened in practice is that the minimum turnover tax was still kept for taxpayers with a turnover of over 50 million euro, and the new deductibility rules will be applied for taxpayers with a turnover below that threshold. And in a way, this leads to the generalization of some sort of minimum tax above the regular profit tax. Because if we crunch the numbers, if we have two taxpayers with a reasonable profitability, let's say a full cost markup of 6.5%, And these two taxpayers have the same structure of expenses, including some intra-group services, management services, which are, let's say, 4% from the total expenses of the company. So the only difference between these two taxpayers is that one has, let's say, a turnover with €1 below the 50 million threshold. And if you make the computation, the additional tax to be paid as a result of the tax on affiliates is actually higher than the value of the minimum tax on turnover paid by the company with a slightly higher revenue. So basically, it's like they've tried to eliminate initially the minimum tax on turnover, but they changed their minds and they included this non-deductibility, let's say, rules as to be like some sort of also minimum taxation. And basically, we have this kind of weird situation in which the business community was expecting one thing, and now we have this this
I
thing
think
that
it's an
we must.
understatement, Mihai, but perhaps, Rudolf, do we see anything similar in other countries? Anything similar like this, or is
No,
this quite unique?
not so much, and certainly not this rigid. It is definitely true, though, that in, let's say, common OECD transfer pricing practice, both management fees and license payments are somewhat under pressure. The latter license agreements can hardly be measured really, truly within a benchmark study, and are less likely to be part of an APA with tax authorities typically. But then again, both are here, they are around. But there is definitely, let's say, some tension when discussing with tax authorities typically on those two subjects, definitely. But that is something different than a cap at 1%. What does strike me as well, a cap of 1% is even more rigid than it sounds. I think, Mihai, if I just heard you well, 1% royalty typically is 1% on turnover. And one that cost level is, could be half or 1/3 or the like. So it's even way more rigid than it sounds.
Yeah, it's very difficult for companies which are having licensing transactions here in Romania to deduct, let's say, even for trademarks when the royalty rate is not that higher. If we are talking about industrial intellectual property rights like patents or know-how or something like that, or so it's when the royalty rate is even higher, it's kind of a game changer for some industries.
And
Yes.
just to make sure, I mean, this is a permanent rule, right? It's not temporary, right? Or
Right now, temporary or permanent is kind of relative in Romania because we had measures which are marketed to the business community as temporary, and they are carried forward year by year. Regarding this specific, let's say, law, the government didn't say that it was a temporary measure. So basically, it's kind of it's here to stay. We do not have this official statement regarding the way in which the new tax on affiliates should be viewed. But there are a lot of discussion about eliminating the minimum tax on turnover. So if that gets eliminated, maybe we will see in the future a generalization of these new non-deductibility rules to be applied not only for taxpayers with a turnover below 50 million euros, but also for taxpayers with a turnover above 50 million euros. It's like these non-deductibility rules will be applicable for everybody. A win from the local business community was the fact that they've eliminated the non-deductibility or the limited deductibility for the interest expenses, because there were a lot of discussion. The local tax authorities wanted to include also these expenses. They said like they had an internal analysis, and based on this analysis made at the level of the Ministry of Finance, they decided that management and consultancy, licensing, and loans were the main three things used by multinational companies to erode the local taxable base here in Romania and to switch profits to another jurisdictions. But everybody argued hard that, okay, we understand for management and consultancy services, that's a separate discussion. For licensing, okay, another separate discussions. But for the deductibility of the interest expenses, we have local rules based on a general European Union directive. And we cannot, let's say, make things even harder than what is mentioned in that. Also, Romania initially applied, for the lower range of the way in which you could deduct interest expenses. So it's kind of strict already. And we said, okay, you cannot make it any stricter than the EU directive recommends. And
Luckily.
we take that as a win, but
Exactly.
you will never know for the future.
So
We
that's
can
the
never
good
know.
news for today, Mihai. So thank you also for bringing a positive note. Rudolf, perhaps if I can start with you, how should multinationals prepare for this? And should you prepare, for example, transfer pricing documentation differently?
You mean from a Western European point of view, Adriaan?
Yeah.
In this case? Yeah, definitely. I think one would wish to reestablish a new design, a transfer pricing design going forward to at least avoid double taxation here, because the deduction will have been limited soon. But then the turnover on license income and management fee income will still be here. So it will have to be reconstructed. And then the critical element is here, how to get to a fair answer based on the OECD rules that we all have agreed to, at least to a certain extent. So that would be the first one. And secondly, I think in the 2024 or 25 documentation that you have, all style, you would wish to prepare yourself in terms of language, at least, to the upcoming new rules, rather than just flip over to 26 and see what's happening then. That's I think too late.
Any tips, Mihai, on that part from a Romanian perspective, so the transfer pricing documentation part?
Yeah, just to, you have to, as Rudolf mentioned, as a multinational company operating here in Romania, you have to reevaluate your priorities and to have to rethink the model. Okay, you had a model in the past. Some expenses which were generated by that model are no longer subject to full deductibility. You have to see if that's the case for you, and if that's the case for you, you have to find, let's say, workarounds. We had a lot of discussion with the local tax authorities here in Romania, and we tried to explain them, okay, we understand that you consider that there are some categories of expenses which are tricky here in Romania, but if we want to bring foreign investors here in Romania, they will try to bring, let's say, the production and also the know-how and also the patents and all kind of things, the technical assistance, the technical knowledge from the group has to be brought here in Romania. And you cannot expect for a multinational company to bring this for free, because the essence of transfer pricing is to try to interact in an intra-group environment just as you are interacting between two independent parties. No independent party will give you know-how, technology, and other valuable things like that for free. So that's not, we are wasting, let's say, time in discussing the basic of transfer pricing. But they said, okay, no, we think that a lot of these transactions are actually not taking place. There is no transfer of know-how. There is no transfer of patents or technical knowledge. And they have something in their statistics, something in their mind. So basically, every taxpayer has to be prepared for this. And also, right now we are seeing this aggressive approach from the Romanian tax authorities as part of ongoing transfer pricing audits, in which they come and they see, let's say, for past years, and they come and see management expenses or consultancy expenses, and they are treating them as non-deductible from the start. Basically taking into consideration the general overview right now in the Ministry of Finance, because if the Ministry of Finance just passed a law saying that this type of expenses should be treated generally as non-deductible, or barely a part of them should be deductible, the
Mhm.
tax inspectors, what they are doing, they are following the lead of the Ministry of Finance, and they are saying, okay, if the Ministry of Finance decided that these actually are tricky expenses, then we must treat them as tricky expenses also from the past. So it's kind of an aggressive approach, which adds another layer of complexity. And as Ludor mentioned, you have to treat the transfer pricing documentation of this type of transactions with in a very serious manner, and try to bring as much argument as possible also for the past, because the future does not look bright. But the view on the future actually influences how the tax authorities see things also for past years.
What if you already have an APA in place, Mihai?
That's another good news. So we are arriving in the realm of good news, because the APA is kind of an exceptions from the rule. If you have an IPA, this will still guarantee the deductibility, the full deductibility of the management of the or the consultancy services charge, or the royalty is paid. Is not specifically mentioned in the law, but by collaborating different, let's say, part of the Romanian fiscal law, it is the general understanding that if you have an APA, then as part of a tax audit, that Romanian tax inspector will come and see the APA for that transaction, and will leave that transaction alone. So basically, the APA is kind of a safety net, and we expect for some taxpayers to opt for this, let's say, in the future. Although, issuing an APA takes time. So basically, if you want an APA right now, it may be the case that it will take some time, and you have some period of time in which the transaction may not be covered. So,
Okay.
but usually an APA certainly helps.
Yeah, definitely. Perhaps Rudolf, can you share something on how businesses are preparing for these changes, or is this something that's not on top of their mind yet?
No, that is definitely something new. What is also definitely different in many other countries, I think, Mihai, is that an APA typically does not survive a change in the law. Usually, that is. So that is a plus for Romania. I think that this welcome risk-taking away measure is here, which is good. No, upon your answer just now, Adriaan, no, I don't think that the community is ready for this at all. No.
And in Romania, I think it's also a hot topic, right, Mihai? Or is it something that's, I think previously, we also had some discussions on this. I think in the past, they never really liked these charges, but now it's actually implemented in the law. So perhaps practically, it doesn't change that much. Legally, it does, obviously, but practically, perhaps it doesn't. Or how do you see that?
Yeah, practically we are still the same in the same, let's say, area of tax authorities not liking this type of charges, but now they have more legal arguments to be brought forward. Because there were cases in which, and we had some court cases here in Romania which were won by the taxpayers. Um, but right now, the tax authorities have some additional legal arguments to be on their side, and this is not helpful. Right now everybody is evaluating the impact of the new measures on their business, and certainly trying to reevaluate their intra-group transactions and policies to be as efficient as possible. And actually, depending on the business models, there are some things that can be changed. An example that pops out of my head: if a group provides centralized acquisition services of raw materials to all its subsidiaries, and the model of the group is that the sale of the raw material is made at the same price at which the goods are acquired from independent parties, while the central acquisition function is remunerated to a service contract based on a cost-plus methodology. And this was the old model. Now, in order to, let's say, eliminate the risk related to the provision of the services, the group may decide to change the structure entirely and to terminate the service agreement and remunerate the central acquisition function by way of applying a markup upon the initial acquisition price of the raw materials. So basically, you are not charging the raw materials separately and the services separately. You are introducing a markup on the raw materials just to remunerate your internal acquisition function. It's not, let's say, a straightforward thing to do, but it may work for, as a workaround for this type of business models, which are, let's say, with manufacturer companies here in Romania.
Perhaps investment climate, the business climate in Romania, will it be triggered? Also a question to Rudolf, perhaps. Do you think multinationals will reconsider their value chain actually by this change, or?
Yeah, they could or they should even, I think. I'm not sure of the direct impact of investment positions in Romania, because taxation and certainly transfer pricing is just one of the typical 15 or so items to discuss about. But I can imagine, for instance, both management fees and license fees come up with an entrepreneur in Romania, and not so much with a contract manufacturer or an LLD type of sales operation. So one would wish to perhaps reconsider, and perhaps the fact pattern could already be there, to step down from an entrepreneurial position to one of those.
Yeah. Perhaps as a final question, Mihai, for you, I think we already discussed the interest, but yeah, that's the state of today, basically. Do you think, are there any signals that other categories of expenses will be treated in a similar manner in the future? Or for example, will the law be extended to also include other categories of taxpayers?
Right now, as previously discussed, the interest expenses were also part of the discussion. And right now we're left alone, but we cannot, let's say, guarantee for the future. I don't know. It may be the case that some categories of expenses are additionally included in a similar law in the future. But also the Romanian tax authorities right now, they do not give a clear definition of what management and consultancy services stands for. If an IT consultancy, relating to SAP or other enterprise resource planning system, it's considered consultancy, because if that's considered consultancy, that's let's say a different topic than general management services provided by the headquarter. So basically, the definition is not quite established regarding what management and consultancy means, and this gives the tax authorities the possibility to include a large categories of intra-group charges. As regard the taxpayers, everybody is expecting that this, if the minimum tax on turnover is eliminated, then this new tax on affiliates will be, let's say, considered as a general rule for everybody. So basically, we can see the generalization of these rules if the other tax is abolished. And there are signals, there are discussions here locally between different politicians saying that this tax on turnover should be reevaluated, because they had, let's say, an estimation of what this tax will bring in terms of amounts to the state budget, and it actually brought like half of that amount, and it's not an efficient way to collect money. So it proved not to be an efficient way to collect money, and maybe they will try to find new ways. And yeah, it's kind of an uncertain thing, but everything is possible. Everything is possible, and there's nothing off the table at this point for us here in Romania, because the general discussion from our politician is that the state budget needs money, and it needs money on the cost of the business community.
I think Rudolf, you can agree, right? That's something.
Definitely.
Yeah. Do you have any final remarks, Rudolf, perhaps on what you've heard today?
No, thank you so much, Mihai and Adriaan, for sharing. I think this is really important news for businesses, for our clients, for our our befriended colleagues throughout the world. So yeah, be prepared, definitely.
Okay. I'll try to summarize our discussion of today. Then please feel free to add anything I've missed. But I think I had a new tax on affiliates, which limits the deduction of, for example, headquarter service expenses, royalty expenses. Will really impact businesses in Romania and also in Europe, and obviously where the HQ is located and where the IP is located. Initially, the measures were even broader. We also discussed the financial transactions part and the interest deductibility. Luckily, some good news today that was not included in this legislation. Hopefully, it will also not be included in the future, but you will never know. I think the law was amended a few times and currently still not fully implemented, but will definitely take effect this year. Initially, the rationale was that the tax on affiliates should replace the tax on turnover, but now you have both systems in place. TP documentation also becomes more important. You also have to include some wording on this change as well, as the coming years will be more important for Romania, but also for where the HQ is located and where the IP is located. APAs that already grant these deductibility of HQ charges or royalties paid will still be valid. So that's also some good news. And I think in general, it perhaps may impact the business climate, the investment climate. But as mentioned by Rudolf, there are more items than just tax that are obviously important. So I think for us and perhaps the listeners, tax is one of the key priorities. But obviously there are more items that are valid. Anything to add, Rudolf, Mihai?
No, that's a well done summary.
Okay. Yeah, thank you both for contributing to this podcast, and I want to thank you all for listening to this episode. That's a wrap for today's episode of the transfer pricing method. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with your network. For even deeper insights into transfer pricing strategies, please subscribe to the Quantera Global's newsletter and get the latest updates, exclusive content, and expert commentary delivered straight to your inbox. Thank you all for listening in and have a nice day.